Good evening. Diwali Kendi, good evening. Can you hear me? Hello? Please let me know if you can hear me.
I can hear you, sir. I hear you.
Okay. Good evening, Uche, and welcome to today's class. I think we should just give like 5 minutes more for others to join before we'll start. And please let me know if you can see the screen. I'm sharing today's material already.
Yes, we can see it, sir.
Okay. So let's just wait 3 more minutes then we'll start.
Right, sir.
Okay. Welcome, lead capital logistics. You're welcome to today's lecture. Welcome, Olanike. You're welcome to today's lecture. I believe all of you can see the screen. I'm sharing the notes already. So let me know if you can see it, and let me also know if you can hear me clearly. Okay, you are all welcome to today's class. This is audit and assurance skill level, and this is one of those topics we've been looking at for some weeks now. I believe the other lecturer started this topic. We've been looking at substantive procedures, and substantive procedure is one of the key method or ways that auditors use to gather evidence about the audit, because the work of the auditor is to express opinion on financial statement, whether it shows a true and fair view or not. Therefore, the auditor needs to gather sufficient and appropriate evidence. And the means of gathering this evidence is through substantive procedure. And substantive procedures involve what we call analytical procedure, test of details, account balances, getting invoices, evidence, vouchers, and all of that. Now, because the auditor is primarily concerned with financial statement, so what ICANN has done with this topic for your level is that ICANN has tried to break down substantive procedure for the different part of financial statement. So I believe when the other lecturer started, he took you guys through the asset part of the financial statement, and now you can use substantive procedures for that part. And you will have done, as in, will have taken you guys through how you carry substantive procedure for PPE, substantive procedure for inventory, substantive procedures for other part of the asset, ranging from your cash and bank balances. And last week we started looking at substantive procedure as it relates to other to liabilities and other areas of the liabilities. We looked at trade payables. We started with trade payables. We all know what trade payable is. The money you are owing suppliers, vendors. That means your money you have to pay vendors within a certain agreed limit time, credit time. It could be 30 days, it could be 15 days, whatever the agreement is. So what the auditor wants to look at is your payable cycle. I want to also obtain sufficient evidence that you actually are owing this amount. So we look at the procedure under that. And from there, we went to provisions. And one key thing I said last week clearly is that your knowledge of FR comes in play when you are doing audit work for provisions. You must know what the standard IAS 37 says about provision, the definition and recognition of provisions, what constitutes provision. If not, you auditing it will be like you are auditing what you don't know. And according to ISA 315, it is expected that the auditors must understand the client's business. Understanding the client business means that you must understand the audit process as well, understand what are the risks as involved in the business, and carry out internal control evaluation. So the auditor must know what provision is all about, the standard definition. So when you are auditing provision on the financial statement of a client, you're expected to look at as the client follow the definition according to standard before declaring this as a provision. Then how did the client measure provision? Provision is one of the estimates you have in accounting. But even though it's an estimate, there is a proper way to measure it according to the standard. We also look at contingent liabilities, contingent assets. All these are form of liabilities that we will see on the financial statement. Don't forget, the financial statement we are looking at now is your statement of financial position. So we are looking at the item on those financial statements. So from there, we stopped at that, and today we also look at non-current liability. We look at what constitutes non-current liability. We say it's a non-current liability once it's more than 1 year. If it's within a year, it's still a current liability. And there are types of non-current liability: debentures, loan stock, loan note, bank note. So what the auditor is concerned about is you will first need to identify what are your non-current procedure the auditor is carrying out. He's not carrying out for any other thing other than to ascertain that the assertion or the value attached to each of these line items are correct and free from material misstatement. Material misstatement means that they are free from error and that they are true. Error and omissions are not included in those figures. So these are the ways for which the auditor carry out substantive procedures for this particular line item. Any question before we go to today's class? You can drop your questions on the chat box too, or you can just stop me so that I can also respond to your question. So, are we together? Please let me know if because the network these days has been funny. So I don't want a situation where I'm already rambling and I'm out of the class. So immediately you can't hear me, please. You can
Yes, I
let
can
me-
hear you.
okay. Okay. So today
Your page is blank.
the screen is not showing. Okay, let me try and
Not
share
showing up.
again. Okay, okay, that's one of the things. Okay. Um, can you see the screen now?
Yes.
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 Yes, you can.
Okay. So somebody drop a comment here. Sir, can your voice be louder than this? Okay. I will try to shout as much as possible. Okay, that's a good
Okay.
one. But I hope others can hear me clearly.
Yes, very well.
Okay.
Yes, sir.
Okay.
You can hear
Okay,
you.
okay. So today we are continuing in the substantive procedures. You know, last week I told you that the like you all know, it's not just last week. The financial statement has three parts. We have the asset, we have the liability, and we have the equity. That's what the statement of financial position. And we've looked at hello, is somebody okay? So we've looked at the liability part and we've looked at the asset part. So today we are going to look at the audit of the equity. So what we are looking at is the equity part of your financial statement. If I may ask, what constitutes your equity under your statement of financial position? You have your share capital, which is also called shareholders fund. You have your under your share capital, you have retained earnings, you have reserves, all those capital that the business owner and investors have contributed together to start the capital. Now, this the audit of this equity part is not really how will I say it? It's not much of an high risk or an area that auditor would normally focus on. But because audit is statutory, and when we say audit is statutory, we mean that audit is guided by the law. In Nigeria, the law guiding audit is CAMA 2020 as amended. And hello, are you asking a question? Please, if you are not asking a question, you can mute your mic so that we are not distracted. Okay, so as I was saying, if you look at the equity part, we have the share capitals fund, the shareholders fund, we have reserve, retained earning, and all the capital that has been put together to run the business. And this is the capital that is sustaining the business. Sometimes part of the equity can just be your share capital alone, but there are other parts to it. Now I was saying something about this part. The audit of the equity is not really a big deal in the sense that once your equity part and your liability part has been audited very well and they match, is and the is just logical that your capital and reserve, when you do the math and the figures should also match. So the only issue here is when your equity part is not matching with the assets. But once they match, you have little or nothing to do. But because, like I said, audit is statutory. When we say audit is statutory, it means that audit is guided by law. And for this level or for ICANN audit and assurance, we are looking at external audit, which is statutory audit. Here, we're not talking about internal audit. We are not talking of audit of ESG. We are not talking of IMS audit. We're talking of financial audit and the one guided by law, which we call statutory audit. So there are some countries that equity audit is a requirement of the law. So there are some specific requirements depending on the country that equity audit must be conducted. So for example, all accounting standard for financial framework, IAS, your ISAs, and the CAMA guide audits in Nigeria. So that CAMA also speaks to how you should carry out the audit of share capitals. Now, equity. So the first thing we'll
Hello,
look.
sir.
Hello.
Yes, you're not sharing your screen again, and you went off for some
Oh,
like a minute.
sorry. Please bear with me. I think the network I'm using, I've been having some challenges, but please bear with me. Anytime I'm out, please just let me know. Let me know,
Alright.
and I'll just reshare. Is the screen showing now?
Yes, sir.
Okay, thank you. So we are looking at the first thing we are looking under audit of equity is the substantive procedure for share capital. What is share capital? There are companies that make their share available to private and public individuals to own. So if it's a public company, let's say an MTN, the shares is public, you might buy shares into it. And there are some companies that is just private individual within themselves that own the share. So how do you carry out the audit when a company is a company that has share? It's not a sole proprietorship. It's not a limit. It's not a partnership, or it's not an NGO, or it's not a shaker. So what you're expected to do first, the first procedure is that you must know the law that guides share capital in that country. So take for instance in Nigeria, there is Nigeria Security Exchange, there is Security Exchange Commissions. These have regulations and law on how share capital should be managed. Even the listing and all of that. The documents for every company that is a listed company, they submit their authorized share capital, they value everything to this regulatory body. So the first thing is you need to know what law guides that unauthorized share capital. So as an auditor, you must be aware of this law and check that the company is complying with that law on authorized share capital. So the auditor will need to check what has been declared as the share capital for this particular company, the authorized share capital as regards the law. So the auditor, and you will not check whether that same amount is what is in the drafted financial statement. So what the auditor is checking for here is that the company is consistent in its authorized share capital declaration. He wants to be he wants to be sure that what the company have in their books is also the same thing they've submitted to the regulatory body. So what they are declaring in their financial statement is not different from what is in their authorized share capital with the local law, with the local regulator. So after doing that, the auditor will also need to check nominal value of the shares. Is wanting to say we have 500 million shares. At what value? When you see statement or documentation around share capital, you will be seeing something like at 50 kobo, at 100 naira, so that you can now have a nominal value for the year. So the auditor will need to check what is the nominal value of these shares that have been issued. If they issue any other shares during the year, the auditor will also need to check what amount was issued, where are the documentations or the evidence that support this amount that you said you've issued, and whether the company has complied with the terms of issuing shares. Take for instance, in recent time, there are some banks and some companies that have been doing IPOs and right issue. Fidelity, if you've been conversant with business news, you know that GTB sold shares recently. Fidelity did same, FCMB. Now, by the time the auditor is coming in later in the year or early next year to audit their books, the auditor will want to know, okay, what are the nominal values of the shares you've declared? Which the new shares you have added to your previous authorized capital share? Where are the documentation? The reason this is important is that companies can use value or their shares to do what we call market manipulations. So if because most time the valuation of a company depends on their share price. So when the share price is increasing or is falling, there is a way the public reacts to that. So the auditor needs to be assured that there is appropriate documentation concerning the nominal value of the share. Now, like I said, if there are new shares that were issued during the year, the auditor will also need to check that the cash received for them has been properly recorded in the main ledger. Like I was saying, if you are familiar with business news, there was a time that there was issue with First Bank. The former majority shareholder of First Bank was saying that he had some shares that are not listed in First Bank book, and the SEC had to wade in and say no, those shares were not properly recorded, they were not the transactions were not done right. So you can't declare those shares. And First Bank even was saying that they didn't receive money for those shares. So what the auditor is doing here is to ascertain first, what are the authorized share capital you have, at what value, and what are the cash commensuration for this check. So if you have new shares you are issuing every year, the auditor also wants to match it to the cash you have for those shares. You know, accounting is always about trying to balance transaction. The debit side must always meet with the credit side. So if you say, you did this investment, where is the resulting end? There is always two leg in accounting. So if you say you have 1 million new shares you've issued, where is the cash equivalent? So that's what the auditor will be testing. So the next thing the auditor will also check is that he will check that the amount you've reported in your share capital also agrees with the register members or shareholders. We all know that shareholders own the company. And for every shareholder you claim you have, there should be a commensurate shares that they have. So if you say you have 1,000 shareholders and your share capital is maybe 5 million or whatever, and that you have 1,000 shares, those shares must be traceable to each shareholders you declare. Now, that means the auditor will be checking for the register where there is a list of members or shareholders of those shares. So you can see that in this substantive procedure, what the auditor is trying to ascertain here or to gain assurance about here is that whatever share value or whatever has been declared as the share capital of an entity, that the value is correct, that the value match with what they recorded with the regulatory, and that the value match with the number of shareholders in their book. So it means that the auditor will be relying on some other document to verify this. There will be some supporting document. And from there, it means that the auditor, before we go to substantive procedure for reserve, there I want us to look at statutory book. So it means that the auditor will need to audit what we call statutory books. Now, statutory books are books that a company have to keep by law. Part of it is memorandum of agreement, memorandum, your article of associations, your company details, all of those books that you are required to keep as an entity. The auditor will now need to audit it because this is where the auditor will see publications, will see minutes of meeting, board meetings, will see the list of register and directors and their interests. We'll even see the loan capital of the company. We'll see asset of the company. So the auditor will need to make attempt to have access to all these books and record because this is where you get detailed and defined information about the entity. So in auditing of equity, one of the substantive procedure is to audit the statutory books of the entity because this is where valuable and viable information will be gotten as regards verification of share capitals and all of that. So it is required that companies should have this book. Some of these statutory books, like I said, range from minutes of board meetings and minutes of general meetings of the company, registers of shareholders, registers of directors and their interest in the shares, the loan capital of the company, meaning if the company has taken a loan facility, you will see it here. The registers of charges on the company asset. So a company has taken bought an asset, maybe fixed asset, and there are some pending charges, fixed charges, or whatever on there. You will see it there. Copies of director service contract. So the board of director, the the terms of their service will be details. There are some books that will detail the terms of director service for non-executive director, the expectation, the nominations, how much they will be paid, bonuses, and all of that. We'll get to the audit of that soon. So the auditors will need to check this. Now, audit work in this area can be included in payroll testing. So, in some of the things the auditor will do here is to confirm those information. Any questions so far? Any question from what we've said? We've discussed about audit of equity, share capital mainly. And we said that the auditor needs to ascertain that the share capital listed with regulatory, the amount is right, and the amount is also right in the financial statement. We also said that the auditor needs to confirm that the nominal value of the share is correct and is well calculated. The auditor will also need to ascertain that the shares capital match with appropriate shareholders that have been declared. And in doing that, they will also need to review statutory books. So if there is no question, there is also substantive procedure for reserve. Now, when you look at your equity, there is part of equity is you have reserve. This is what you call your share premium or your retained earnings, and part of your equity that you keep aside. Some part of it can be used to pay dividend when the time comes. So the auditor will also need to carry out substantive procedure on reserve. And one of the first thing the auditor will do when carrying out substantive procedure on reserve, because reserve is where you take money to pay whether dividend or to do capital project. Reserve is also part of your where you have your return. That's where money you use to run the business, you take it out. So the auditor will need to obtain analysis of how money is moving in and out of the reserve during the period under review. So what we are saying here is that, let's say the auditor is carrying out a substantive audit on reserve for year 2023. So the auditor will need to obtain the closing balance for 2022 and also obtain all the in and out that has happened in the reserve in the period, so that when he's looking at the current figure, there is justification for where you had. So that's the first thing he will look at. Now he will not check after obtaining the details of how the reserve has been used and what has been coming in. Reserve profit goes into the reserve, profit goes into the retained earning, as capital expenditure sometimes come out from the reserves. And when there is a new injection of fund from a new investor, it also goes into the reserve. So the auditor needs to have all these details. Now, the auditor, the second thing we will do is to check for the accuracy of this movement by checking supporting documentation. So it's one thing to have details of how the reserve is being used, what is happening in the reserve. Is another thing to check how accurate or how correct is the calculation. And in accounting, accuracy is one of the fundamental principle of accounting. If you started from foundation or ATS, talking about financial statement, one thing that is very, very key in IS1 is that the information must be accurate. The information must be accurate, because most investors or the users of the financial statement, they want to believe that the financial statement is faithfully representing what it says, and the auditor is there to give assurance that yes, it is. So if it is not calculated well, whether due to error or omission or fraud, there is an issue. So that's why the auditor will need to check for the accuracy of this movement. And a way to check for it is to ask for supporting document. Take for instance, a company reserve at the beginning of the year is showing 50 million. And when the auditor is asking for details of movement, because currently the reserve is showing, maybe the reserve is showing 10 million. So from 50 million, it has gotten down to 10 million. And he asked for the details. And they were say, we have some major extraction of 5 million, 10 million in the course of the year, and they provide. Now it's okay. What did you use this money for? Give me documentation to back this. Was there a capital project embarked on by the client? Where are the supporting documents? Who signed this? Is the executive management aware? Where are the board of meeting where decisions were reached that this is what we want to do? Then if the sometimes the reserve could increased. Oh, we started with the year 50 million. Now we're having 150 million. Where did you get this money from? Who are the new investors? Who are the new uh, uh, capital? Who are those giving this money? Because as an auditor or an accountant, one of the things you should also look out for is evidence of money laundering, because it's a big issue with every government that money laundering should be disclosed. So the fact that the company is having bogus profit or they have unusual injection of fund does not mean that they are doing well. Oh, where are the documentation to support this? Where are the evidence that this money is legit? So these are some of the things that the auditors will check. Then the auditor will also check that any specific legal requirement relating to reserve have been complied with. Now, this is the same to what we're saying. If you say your share premium account is growing, when, how, when have you abide by the law that guides share premium? If you say you have new investors who come in to invest, have their asset been properly declared? Have the KYC been done properly? Is it money of is it illegit money they're trying to put through the business? So the auditor will need to check that there are proper legal requirements to this reserve have been fully complied with, because the auditor is trying to give the investing public assurance that this financial statement is well prepared, it's showing true and fair and free from material misstatement. So that's what the auditor will want to do here. That there is no infringement on the part of the the client or the preparation of this financial statement. So from there, the auditor will also have to check if there have been withdrawal due to dividend payment. You have to confirm that the dividend that have been deducted are legally distributable. Now, for you to say you want to pay dividend, it must be that you are paying it to certain people, and there are certain uh, requirement, or those dividends are being paid legally. So you need to confirm how have the dividend been paid. These dividends that you pay, is it paid actually? So they might need to check with who received what. The same thing, check the authorization for the amount of dividend. Who authorized that this dividend should be paid? Usually, when dividend wants to be paid in listed company, there will have been an AGM where the shareholders will have been told, there will have been an agreement about what amount to pay. So it's not just a summary payment, it goes through a process. So the auditor will need to check that they've complied with that legal process and that there are appropriate authorization for the dividend paying. You also have to check that the dividend calculation and check that the total dividend pay are consistent. When you companies want to pay dividend, they will say, we are paying 10 naira for every share you are owning, or we pay 50 kobo for every two, three share, whatever. Now, the auditor will need to do that calculation that the appropriate dividends have been paid based on the dividend amount payable. So the auditor will need to check all of this when carrying out substantive procedure on reserve. Any question before I go on? It's likely that we'll finish on time today because this topic we were supposed to finish it last week, but I have um, what is it? I have network issues, and that's why I couldn't finish that. So, but we'll go on. Now, from there, we move on to what we call director emolument. Don't be afraid with the big word. Director emolument simply means director remunerations. It means director's pay. How are you paying your directors? That's what that simply means. So payments to directors. Now, in any listed company, in any company, you have directors, board of directors, and board of directors is like the in between shareholders and the management. So part of board of directors has composition of management and shareholders, and these are the people that gives directions to company. They are saddled with the responsibility of corporate governance, ensuring that there is appropriate behavior and compliance in the company. So most time, the payment to directors are declared in the book or in statutory books of company. The reason is that shareholders have put their company into the hands of directors. So most time shareholders want to know how much we are paying these directors, what bonus are we paying them, what is the details of their salary, their pension, any benefit they are having. So usually for listed company, you or when you pick annual report or financial report of listed company, you will see a part where there will be detailed explanation on how directors have been paid, what they are entitled to, including bonus, including pension. So the play is usually a detailed price. So it's also part of requirement that auditors should carry out um, audit procedures for directors' payment. The reason is that shareholders want to have assurance that our directors are not just taking our money and not they are just siphoning our money. So one other part under audit of equity is that direct auditors carry out a review and look into what each directors have been paid. So there is a detailed procedure for that. And in the world, the first thing the auditor will need to do is to first, just like you do for all the other, obtaining a list or schedule. For instance, if you are carrying out this procedure for share capital, you obtain a list of schedule. You are carrying out a substantive procedure for reserve. You want to see all the movement in the reserve. So the same thing is when you want to do an audit for directors payment, you must have idea of all the directors and the payment that have happened for the period. So you will need to, as an auditor, obtain a schedule or a list of directors and all the payment that have been made for them for the period. So the first thing is obtaining a detailed schedule of enrollment for the year for each director. And like I said, that accounting is about accuracy, correct calculations, and you now do what we call casting. So from the schedule you've obtained, you now need to check whether the total declared in the financial statement matches what each director should get. So let's say in the financial statement they put on that note, you will see director's payment in financial statement under what we call notes to the account. You won't, if you see it in your equity, it's rare, but where you usually see it is note to the account. So you check that the total amount declared for pay to directors, you match it because you will have obtained a list of what each director should get. That, oh, this thing matches. There is no money is missing or hanging somewhere. So after confirming and checking that the amount matches what each director should get, you will now do a form of confirmation from each director that their enrollment are complete. So the company is not owing them, that the company has not paid and all of that. Now you might ask that, what is the stress in all of this? Why do director do this? If it's a listed company, it's a requirement. It is very necessary because listed companies are public companies. So these directors are holding trust for the owners of the company, which are shareholder. And this speaks to your first topic in this class, the need for the need and concept for auditing, where you talk about accountability, and you talk about stewardship, and you talk about agency. So directors that are doing that, the principle of agency says that you are holding forth for the principal. So directors are more like, in quote, servant of the shareholder. So it's expected that they don't want, there is no issue with them. And that's why most times when employees are grumbling that these directors are well paid or they are overpaid and all of that, the reason most directors are paid well is because the shareholder don't want any mistrust between the two of them. Directors are the one running the company, so the shareholders want to gain confidence that they are not looking at their because they are not paid well, so they are trying to dip their hands into the business. No. So as an auditor, you need to confirm that they've been paid, that the money they said they have to pay that have been received. Then you also review minutes of board meetings and remuneration committee. Why are you reviewing this? So that if there is any undisclosed payment or enrollment, any money yet that is not disclosed, the first thing I said, you obtain a schedule where you get the list of payment due to each director. It's possible that there is a payment that is not in that list. But when you are reviewing minutes of board meeting, you can come across anything that is not disclosed. And that's why auditors like to ask for minutes of meeting. It's not because they just want to read minutes of meeting for fun. In minutes of meeting, there are some things that will be said that when you look at the financial statement, you will not see it, or it will give clarity on what is in the financial statement. So minutes of meeting are more like an eye opener or revealer to some hidden things. If there is an undisclosed anything, maybe the company is not disclosing something they should disclose in the notes to the account, you can easily get that from the minutes of meeting. So when the auditor is asking for the minutes of board meetings and remuneration committee, he wants to find out if there are undisclosed payment. Maybe there is a payment that directors have agreed that we just pay ourselves. This will not be included in the financial statement. What the auditor is testing for here is what we call completeness assertion, because one of the assertions of financial statement is that it should be complete. All records are complete. So he's looking at the minute. Is there anything that these people are hiding? So you also need to review the cash book for unusual transactions. Cash book these days is more like the bank statement, is like the bank account. So you are reviewing this to check that are there unusual transactions, that just some payment. What is this payment transaction for? Why is this director A pay this if it's not part of the entitlement? So you need to do the auditor will need to do that. The auditor will now also need to check the payroll record at against the bank statement. What's the payroll record like? How have they been paid over time? He's wanting to say this is the list of what we want to pay them, and is wanting for the minutes of meeting not to reveal any unusual transaction. But when you look at the payroll and the bank statement, what has the payment pattern been like? Do they match? Is there anything I'm missing? So what the auditor is testing for here is completeness or misstatement or understatement. So he wants to, then the auditor will need to also look at the tax return as related to director's payment, who are the appropriate tax being paid on behalf of this director, so that here you want to be sure that there are no pending tasks or undeclared tasks. So the auditors will do this. And there is part of substantive procedure is analytical review or analytical procedure. What analytical review or procedure simply means is that you are comparing previous or prior year with the current year. So if, let's say, 50 million or 500 million has been paid in the last 2 3 years for directors, you want to look at what happened that we are now paying 800 million in this year. So there will be justification for that. So analytical procedure will give you comparison analysis so that you can observe any deterrent or deviation. It's used for almost all types of substantive procedure. Whether you are even doing substantive procedure on liability, analytical procedure should be part of it. So you perform an analytical review by comparing the enrollment against prior year enrollment. So what we're saying is that you compare the payment of previous year with the current year, and based on the knowledge of the business and director's performance, you can inquire as to reason for significant variation. So when you do analytical procedures, when you now see any variation, last year we paid 500 million. Why are we paying 800 million there? Why the increase of 300 million? So if there is no appropriate justification for it, that is an exception that the auditor will need to query further and obtain sufficient and appropriate evidence on. Otherwise, the auditor will declare a disclaimer opinion. So the auditor will also need to review, inspect director's contract. Oh, Director A is supposed to be at a certain level, and based on the contract, this is what the contract says that we'll be paying. This is the review. This director is entitled to only one car. So you review what the details of the contract are. Are we supposed to be paying for the drivers? Are we supposed to be paying for the housing? What kind of bonus percentage are we supposed to? In the contract of these directors, just like your employment letter, it will be stated clearly what your benefits are. So the auditor will need to review this to justify the payment that they are being paid. Don't forget, the auditor also wants to identify that there is no money laundering, that the directors are not cutting corner, because whatever this they are supposed to be paid is what they should get. So these are some of the procedures that the auditors will carry out when conducting audit of equity. So the audit of equity is majorly on the capital area of the financial statement. So from all we've been saying so far in the last 2 weeks, we've looked at all the aspects of the statement of financial position, starting with the other lecturer talking about the asset, the different classes of asset, non-current asset, current asset, your inventory, receivables, prepayment, and also your non-current asset, the investment, your PP. The substantive procedure an auditor will carry out to verify the figures so that when he's passing an opinion, it can count. Then last week, we also looked at the substantive procedure for liability, your trade payables, your accrual, provisions, and now we just looked at the audit of equity. One of the key things about this is that the auditor wants to ascertain the figure. And in ascertaining the figure, you will need to get informations that whether it's list or schedule that feed into this figure. And you also need to carry out analytical procedure where necessary. So if there is no question, we just finish the substantive procedure on statement of financial position. So we'll now go to what we call key income statement figures. Any question before we dive into this? Any question? I hope we have Pathfinder. Williams, do you have any question? Lakon, any question on what we've been talking about so far? Ibrahim
Just
is
someone ask a question. The chat box.
okay. The charts. Oh, sorry. So somebody dropped. Okay, we have two chats here. And somebody dropped a question that please, what happens where remunerations, allowance, and benefit are covered by a policy as opposed to the contract of service. Now, this is a very good one. Now, there are remuneration policy for most listed companies. In the remuneration policy, it will be stated clearly what constitutes your remuneration. Oh, this is the remuneration policy for A, B, and C PLC. As a director, you are entitled to this, blah 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 blah, percentage and all of that. But in contract of service, which is more like your employment letter, the amount payable will be clearly stated. Now, what you're asking is that the remuneration policy and benefit could state that you are entitled to, maybe your bonus will be 10% of your gross or 10% of your whatever. And when you now get the contract of service, which is more like employment letter, and you find out that the bonus is less than that, what happens? Now, if you look at the substantive procedure that will be carried out by the auditor under remuneration of services, the the most important thing here is that the auditor must ascertain what total amount is due for a director. And the way to ascertain that is to get the list of schedule that this director will be paid this amount. Now, the remuneration committee might have said that this director is entitled to bonus 5%, 10%. But when the contract of service is issued, in calculating it could be 3%. At that point, it seems like a variation, right? But if that's what the contract says, and that's what the director is being paid over time, no problem. Where there will be an issue is that if the contract of service says that the director is entitled to a bonus and the amount is 3% of, let's say, his gross, and the policy is saying 5%. After the contract, the company now start paying 5% as against the contract, then there is a mismatch because the letter is saying this is the amount you are entitled to. But maybe when the person now gets in, they find out that the amount is not 5%, they just increase it summarily. There must be a supporting evidence to any payment or remuneration paid to any director, even if the contract of service states otherwise. For instance, this question can best be answered that when you join a company, as maybe you join the company as a manager or an associate, in your contract of service, they said they will be paying you 600,000. But after you join, after 6 months or 7 months, you were promoted to maybe a senior manager and your amount goes to 800. Now that has changed from what your original contract of service is. There should be accompanied documentation to that increment. So no matter what the remuneration policy says and the contract of service saying, the two at times will just be in line, but the amount you will be paid is what the auditor is concerned here. So if the contract of service is saying you have to be paid 500,000, the remuneration will just state, the policy will say you are entitled to so benefit, your gross is going to be increasing depending on profit, blah blah blah. It won't give us exact figure, but auditor is more concerned with the figure. What the auditor will need the policy for is that what benefit are you entitled to? Is it replicated? Is it reflecting your contract of services? I hope this answer your question. Who is asking that question? I didn't see the name. Uche. Okay. Hello,
Um,
Uche. Okay, you
yeah,
have a
thank you. So thank you for the new insight. But my question was more around where the contract of service is completely silent on fees, which is most likely this is the most common practice that come around, especially for
okay.
non-executive directors. And the
Okay,
board instead
okay.
we have a remuneration policy that way, has what their fees are. Because it's easier to administrate that way. You have turnovers
Mm,
on the board, and then let's say, for instance, flight fares went for 30K, like 150K. So it
mm,
also helps you to benchmark as the inflation comes up without having to negotiate individual contracts.
mm-hmm,
So that
mm-hmm.
was the light I was asking him.
Okay, I get for non-executive director. Yeah, I understand what you're saying now. It's normal for the contracts of service to be silent on their actual pay. But if the remuneration policy clearly states the percentage or the modus of calculating, then if there's going to be an intervention, the auditor should note it. Because one of the procedure is that if you look at this procedure, it says seek confirmation from each director that the annulment are complete. Now, if the contract of service is saying they are entitled to something and is not they are not getting it, or the policy says they should get something and they're not getting it, what is happening here? These are the exceptions that the auditor should pay attention to. The auditor must check that the addition in the schedule agrees to the total relevant disclosure. So the auditor will look at what is the remuneration committee on payment. What are they saying? What is the range? Just like you said, these are non-director. Some remuneration committee will say for any special meeting or anything, the directors are entitled to this. Just like you said, to benchmark against inflation and all of that. But what we are saying here is that any variation should be justified. If there is any inconsistency in the two contracts and services, why? Why is that inconsistency there? Why is it not addressed? What is happening? Because to be frank between you and I, these are some of the ways that companies suffer leakages, financial leakages. They will say it's directors, his policy, and money will just be leaking out. So most times shareholders are even not happy with any ambiguity around directors' payment or directors' fee. To be even tax authorities, they are more particular about directors' fee. Government, as for listed company, they want to know what composition, how is it being done. Is a very, very touchy area for a lot of listed companies. I hope that tries to answer your question.
Yes, he
Okay.
does. Thank you.
Okay. Any other question before we go to audit of profit or loss statement? Okay, I think there's still one more question in the chat. Okay, someone said can't hear you clearly. I'm sorry. I'm already shouting. I hope can others hear me clearly, or is it general? Hello, please let me.
That was then, that was then when you went off.
Oh, okay, but I'm clear now, Abby. Okay,
Yes,
thank you.
yes.
Thank
And
you.
please, this
Okay.
material, can you help us to send it? The material you're using.
Okay, the material. Okay, let me see. Let me see if I can resend it. The group is A November 24, Abby. Because I have so many group for audit group here. Let me resend it. Uh, so if you can check the WhatsApp group, I just sent it again. Let me know if you have it. I just sent it to the chat group again.
Hello,
Just
sir.
send it. Yeah, hello.
Yes, sir. Please, before you move on, can we? I don't know if you know of any participant talk towards this problem
Okay.
and topic we're
So
talking about.
although I'm not using my system currently, but let me see if I can access past questions from Pathfinder. Let me see. I just have to use another system for this. My system is not. But let me check. I think I should have some Pathfinder question. I actually wanted to come with question, but I have issue with my system. Okay, let me see. Um, I'm trying to see if I can open my mail from here. So there are actually most of the past questions I've seen around this is on this director's fee. So the question will usually come in this format: that what are the substantive procedure for maybe director enrollment or trade payables, or if let me see. Okay, I'm opening now. Okay, or what I can do after today, I will send some past questions to the group that relates to this. So we can, because is that okay? After the class,
All
I
right.
will.
Then,
Okay.
let's see.
Okay. Any other question before we go on? Okay. If you can still see my screen. So, like I said, we've been looking at statement of financial position. We've looked at, I believe the other lecturer have done justice to the asset part. We looked at liability. And what we basically looking at is the procedure the auditors will carry out around these key line items, just to ascertain their figures and ensure that the financial statement shows the true and fair view or otherwise. Now, it's very important that we also look at the twin brother of the statement of financial position, and that's your profit or loss uh, statement, your income statement, statement of financial statement of profit or loss, which is otherwise known as income statement. Now, in looking at this, we won't look at all the line item under your income statement. We will just look at some line items, key line items. And why are we looking at these key line items? Because these are the fundamental parts of your income statement, and the procedures are not they are not just they can be applied to other line items. So for the procedures, we will look under revenue, purchases, or your payroll cost. You can tweak it to apply it to whether your expenses or other part of the income statement. So quickly, we'll start with the first major part of your income statement. Every income statement starts with what we call revenue. In other places, you can call it sales. Now, your revenue is where you record your inflows, is where you capture all your inflows. So some will say it's sales. Now, the auditor needs to test for this. And what the auditor is testing here is whether there are controls adequate that is capturing all the revenue. You are testing majorly for accuracy. You are testing for understatement or overstatement. You want to be sure that all transactions have been captured, and you want to also verify the authenticity of every transaction. So you want to be sure that if this company is saying we are selling 500 million, where are the evidence? Is it true? Where are where come you are selling this? What is generating this revenue? What is generating this revenue? Are you capturing other income as part of revenue? I don't know whether it's in this class or advanced audit. I don't know why I keep going back to this today. Money laundering. One of the ways that money laundering is being done is that proceed of fraud, proceed of criminality are brought into legit, so that it will seem like this money is. So you find out somebody is into let's say an hotel business, and the person cited the hotel in one obscure places. But when you are looking at the financial statement, you see that this hotel is declaring surplus, and you can even see evidence that there is money. They are painting the hotel every year. They are renovating the room. They have cars. But when you look at where are the client or customer coming to this hotel, where are they getting this money from? Where is this revenue coming from? So most time, what people or criminals do is that they look for a business that is not easy. They will now use their illegality and put into that business. So your work as an auditor is to check for the validity of the revenue figure. So you want to test. You want to test to obtain, and your testing is about obtaining evidence. And I said that one of the other leg of substantive procedure is analytical procedures. You want to compare. If you can't compare with prior year, you compare with industry standard. You compare with, you benchmark with industry. So if somebody is running a retail business in a locality, you obtain how much do people who do this kind of business make? How come you are declaring surplus? What are you doing that is fantastic that others are not doing? What are those things? Where so these are some of the things the auditors want to check. So you want to also check for you batch transactions where because the risk is that people can overstate their revenue. Overstating revenue is one of the things people who have ulterior motives want to do. So when people are looking at their financial statement, they be this business is doing well. So you want the clients and the business to provide evidence of record sales. There should be enough evidence to justify the revenue. So the auditor must get what we call sufficient and appropriate evidence. Please, anytime we are talking about audit evidence, don't forget those two. That audit evidence must be sufficient and it must be appropriate. It's one thing to get evidence, but it's another thing for that evidence to be relevant and for that evidence to be in enough quantity that matters to justify whatever claim the auditor is making. So that's basically what the auditor is testing for here. Revenue is often tested by testing controls. It should also be possible to obtain strong evidence from analytical procedure. So you carry out analytical procedures to obtain evidence. What's the and in your FR, you do ratio analysis. You know that revenue, there are some agreeable ratios that revenue must match with your gross profit. There are some agreeable ratios that your revenue must match with your cost of sale. There are some agreeable ratios that your revenue must match with your expenses. So analytical procedure, as much as it's also with prior year, it could be with also other line items on the financial statement. So you want to see what is the strong relationship between revenue and other key figures in the financial statement. So as you're looking at the statement of financial position, you want the revenue to also match with what is there. So your receivables, you should be able to obtain evidence. This because it's not revenue until you render the service and the money is at hand. Based on IFRS 15, I think IFRS 15 is skill level. Am I right? For your FR, for those taking FR, IFRS 15 is tested at skill level. Am I right? Okay. Okay. Anyway, there is a criteria for measuring revenue contract from revenue. When is it revenue? So the auditor will want to also test for that. That this revenue is actually revenue. So that's what the auditor is testing here. So the auditor will need to ask the client to provide evidence that recorded sales actually occur. It will take samples of entry from the revenue account. It will do vouching for transactions because the risk, like I said, there is overstatement. So from revenue, we go to purchases. Now, what is purchases? The auditor is also testing for similar thing under purchases. What are the control in place to capture purchases? Or how is purchases made in this business? The auditor will need to obtain an understanding of how purchases are recorded. So the auditor in this instance will be asking for all purchase orders. How where are the record of purchase orders and the details? Are they correct? What's the process? When you want to make purchases, there should be an accompanying purchase order. Purchase order is what you give to supplier that this is what you want, and it has to go along with approval. So because the risk of purchases is that there might be understatement. People might not want to declare that they purchased something. So the auditor want to test that there is completeness here. So he will be asking for purchase orders and not just asking for only the purchase order. From the purchase order, he can now link the purchase order to the goods, whether they've been received. How is goods being received in the entity? Who received good? Were they stamped? Were the the invoice staff, where were they recorded? All goods received must be properly recorded in the inventory account system. What is the inventory accounting system like? So these procedures will be carried out on purchases. And it will also be, okay, from these purchase orders, let's check the accuracy of the recording. Oh, so if you see any goods in the inventory that has been recorded, where is the accompanying purchase order? If there is no purchase order, you flag it. If there is a purchase order and at the point there is a documented evidence that they were received, where are the physical goods? You should be able to trace it continuous like that. If any leg is missing, that should be flagged. So from the purchase order, you look for where goods received notes are served. So if there is no good receipt note and there is good, how come? Then from that purchase order, you can link it to the payment of those purchase order. Are money paid for good not received, or are good received and money not paid? So these are what the auditors will check. You take a sample of a purchase order and you follow the line like that, and that's what we call audit trail. You check that details of these goods were properly recorded. So you do that. From the purchase order, you can link purchase order to the purchase invoice. Once a company has raised purchase order for the supplier, it means that there will be an accompanying invoice when the goods come in. So you check the details on the invoice, whether it matches with what is in the payable ledger. The company will make payment based on the invoice they've received from the vendor. So all these documents are what the auditor will check. Now, some of these documents might be in an IT system environment, they might be in e-format. It doesn't matter. It's still the same procedure. You are, if it's in an ERP environment, you ask for access to check. So there will be a tracing. Was a purchase order raised? If purchase order were raised, were the goods received? Who received the goods? Were they stamped? Where are they? When were they stamped? Where are the goods housed? Where is it? All this can check consistent and verify physically. Then you now link to the supplier's account. Okay, if we received the good, where is the accompanying invoice from the supplier? Who in the payable received it? How was the payment made? So details in the purchase invoice, you check whether it has been entered correctly and only for goods that have been received. Were invoice received and good not received. So you will check all of this. So the auditor will do what we call is one of the legs of auditor is to do observation, verification, inquiry, asking questions. So you will follow through on that and check all of this. Then we check for the accuracy of the supply invoice. At the supply invoice, the amount properly calculated. The quantity received, does it match the price? These are what the auditor will check for purchases. So the last part we'll look before we call it today is payroll cost. Now, these three parts that we've looked at, they are very key part of the income statement. And why are they key? Because these are the areas that there can be misstatement, and not just any misstatement, material misstatement. And I said that material means that these are the areas that can be error or omission, either due to fraud. So if you look at this area, these are the areas that there can be leakages, money can be stolen. So the last part we want to look at is payroll cost. We all know that payroll is an avenue where money can be paid for fictitious staff. So the auditor is concerned about the amount in the payroll. What is the income statement payroll looking like? Because like I said, this is an area that there can be material misstatement. So the auditor wants to focus on what is the calculation for the payroll cost. Just like you do for your purchases, I said that you can use all this procedure for any of the line item. You trace a particular staff, the amount it should be paid, similar to what we discussed under the director remuneration. You trace it like that. You calculate that the payroll cost matches. You check for analytical procedure. You said you have 10 staffs. You said these 10 junior staff, these amounts for each junior staff. Has it been calculated accurately? You check that oh, the gross pay matches the number of employee, you follow it like that. And if you say you pay 100 million for staff last year and you have, let's say, 15 or 10 staff, this year you are paying 200 million and say have 15 staff, what happened? So it's similar to the question of the contract of service. Have anybody been increased? Where are the documentation to say somebody has been promoted? Or is there a salary review? So you ask for this justification. You check for all of that. You see the number of staff because for payroll is an area that if it's not well calculated, money will just be paid to ghost worker. So the auditor wants to check this. So the substantive procedure, you check that the employee exists. You go to HR, ask for personal record, you match it with the pay. Then when you see, you ask for a list of those that have left the company, and you check whether their name have been removed from payroll system. All of these things are what happen in real life. So for listed company, they are not joke. So the auditor checks for employee assistance, it checks for the gross pay, whether it has been calculated well, appropriate deductions have been made. It will take a payroll sample. How is the tax calculated? What are the statistic deduction? So these are the procedures that will be carried out. So like someone was saying that past question, I think I will need to really look for past questions to give on this. But if you have your Pathfinder, just look at this key. When you go back and you're looking at this test, I want you to look at those procedures. You don't need to memorize it or anything. Just familiarize yourself with it. These are what happen in reality. So when you look at it, when you get to the exam, take for instance, you are asked a question, they will have given you the scenario, a director A is receiving this, blah, 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 blah. So as an auditor, what procedure will you carry out to verify director's enrollment? First thing is to obtain a schedule of list of all directors and their pay. Match that the pays have been calculated. Just so I want you to just familiarize yourself with the procedure. Or you can be asked a question that you are doing a review for company A and you've looked at the income statement. You want to, what key procedures will you carry out, or what area of the income system will you carry out procedures to ascertain the figures in the income statement? You just look, we've talked about three major places now. Payroll cost is part of expenses, it's called staff costs in some other claims. So you know that your revenue is very key, purchases is very key. Then if it's the statement of financial position, what substantive procedures or what area of financial the statement of financial position will you be carrying out procedures as an auditor? You look at the key areas, inventory for if it's liability, you look at trade payables, if it's current asset, you look at receivables. So just go back. But I promise before the end of next week, I'll send past questions so that so that we can also look at and familiarize ourselves with exam questions. Any question? I hope we
Okay.
are all, okay, Uche, your hand is up.
Yeah, thank you. Sorry, in your experience, are there any substantive procedure that cost across board? Let's say like two or three that you are definitely going to do, irrespective of which line item you are looking at or which financial statement, whether it's a financial statement or P&L.
Okay, so the substantive procedure that I will say cut across boards. Let's say for this particular topic, one that is usually common is when you is under the asset pass. The procedure that you carry out for your bank and cash balances. So if you look at the procedure for your bank and cash balances, is to verify the figures and the amounts. If you look at it and you're smart enough, you see that those procedures, in a way, you can tweak it for any of the other procedures. Take for instance, under your bank and cash balances, you want to ascertain the figures in the balance that this is the figure. So you do secularization to bank, you get bank statement. You are getting bank statement for a stuff to see a list of all transactions of the entity. Why you are saying circularization is to confirm those transactions and their account balances. So if you want to apply those procedures to say, let's say receivable, for instance, what is receivables? Is the money you are expecting from supplier. So the first thing is to have a list of all your suppliers that is in your receivable account. For your receivable account, you will now look at, okay, let me confirm the amount. Hello, is somebody asking me a question? Okay, so you want to confirm. So if you look at this substantive, hello, okay, if you look at this substantive procedure, there are 3 or 4 steps that are common to all. Obtaining the list of what you want to test, verifying the amount of the list you are testing, and confirming the list as against the figure reported either in the financial statement or in the book of account of the entity. Then lastly, determining that there is accurate, no omission of any list. So all those 4 process, you can apply it to any of the major substance procedure you are testing, whether it's director remuneration, whether it's liability, and all of that. The only one that seems a bit different is your provisions and liability, because when you are carrying a substantial procedure for that, don't forget provision and liability are accounting estimates. So what you want to first do under that is, are provision being recognized in line with standard? Is it measured in line with standard? So when you can ascertain that, then you can now start checking on the accuracy of the figure. Is that clear, Uche? Or Uche has dropped?
Yes, thank you. It was very clear.
Okay. Any other
Sorry,
question?
sorry,
Yeah,
if you can
okay.
repeat the 4 items again. I lost you. The line was cracking when you said them.
Okay, so the 4 major process that is peculiar to all of this procedure is: one, obtaining the list of what you want to test. So whether it's assets you want to carry out the substantial procedure for, whether it's payables, whether it's receivable, whether it's directors payment, you must obtain a schedule or a list of what you want to test. Now, based on the list you've obtained, check the total amount that has been declared and compare it with the list whether they match. So we have 10 receivable and 10 receivable account. Each of them will have a certain amount. Does it match the amount that has been recorded? We have 10 directors. We have the schedule of the entitlement. Does it have match the amount that has been declared in the note? So the first thing is obtaining the list. The second thing is matching the amount and verifying its accuracy against the list. Then the third thing, when you confirming that that amount has been recorded accurately in the financial statement. So if we say our directors will be paid this, or our receivable account is this is the total list. What has been recorded? Take for instance purchases. You've obtained a schedule of purchases in a particular period. You've obtained the POs raised. That's like a listing. Have we received all these goods? Where are the invoices? So as you're obtaining the list, you are getting supporting document to match the list. So if it's receivables, where are the evidence that we did supply and sell to these people? If it's payables, where the evidence that we did receive from this list? Okay, if we receive from them, where is the amount due? You calculate it. So first list, second verifying the amount due to the list, third accuracy of the list, then get appropriate documentation to. So if you go over those substantial procedures over and over, you see that there is a type to it. So when you are in exam, even if you can't remember, you have the idea. Once you write that, you will pass, and all of you will definitely pass. So any other question? It's only Uche that may ask the question, and I don't want to believe only Uche is in this class. Anyways, so please, if you guys will need to do me a favor, maybe tomorrow or let's say Monday latest, you can just drop me a reminder if I have not gotten the past questions so that I can, because I have other distractions as well. Any question? I'm giving you guys room to ask questions. Are we all still there? Or is it just me? Network. Okay, I can see you, Che. Mr. Ibrahim Esquire. Any question for me? So next week, I'm not too sure whether I'll be the one around or the other lecturer. But if I'll be the one, I'll definitely come prepare more. So if there is no question, it's 9:55 now, and I'd like to call it a day. Please do have a good night rest, everybody. Good night.
Good night. Thank you, sir.
Good night. Thank you very much.
Thank you, sir.
Sir. Yeah, you're welcome. Good night.
Good night, sir.
Okay, good night.